we do have a lot of other managements lined up for you all as well. ABB India too is in focus after they reported their numbers, margins, where are they expected to go, what is the outlook in terms of order inflows as well. Let's bring on board Mr. K Sridhar, CFO at ABB India, joining in with us. Thank you so much, sir, for joining in with us this afternoon. I want to start by talking about those margin numbers, right? Because what we're seeing in terms of the margins also, what's aided the strong margin expansion this quarter, and that's to almost 16%. So what is it that is aiding the margins?
I think when it comes to margin, I think it's basically driven by three factors which helped us achieve this corridor of margins. One, it's a better mix of orders and good execution capabilities, which impacted positively on the capacity utilization. So which we earn these particular margins. And also, as we were mentioning, the reach of our customer base is more deeper into the different markets in the country, and that's something which has also helped us to get a better revenue mix. And last but not the least, services, which was probably subdued till now because of the after effects of the COVID, have now started to improve, and that's also started to have a positive traction on the margins. So that's how we see this quarter has been substantially better than the rest of the quarters what we had. And last but not the least, also we had a positive, favorable, I would say, exchange variation, number one. And number two, the softening of the commodity costs in the recent past has also helped us to gain on the material cost. So broadly, I think to summarize, it is revenue mix, it is operational efficiencies, and the capacity utilization, which sort of push the margins in the right direction.
Anish also joining in the conversation. So a lot of tailwinds working out for the margins. But my question to you is that a lot of analysts fear that gross margins have peaked in the quarter gone by. What would you say to that? Is there more risk on the downside to margins rather than upside?
So let me give you my perspective on this. First of all, I think, as I was saying, the margin expansion is driven by three or four rather major factors. One is basic capacities, the demand intake, which is actually the volume growth, is something what we are expecting should continue to happen. I think that's something that in the near to medium term is something where we don't see much of an headwinds at this point of time. So that covers the so-called the basic recovery, which is there required for the factories to happen. That's number one. And number two is definitely about what sort of mix of the orders, which helps us to get the better churn and the profitability around this particular piece, which is a mix of exports, the services, and the base and large orders. Right. So that's also at this point of time in the right momentum, as what you would have seen in the last 3 to 4 quarters, and that's what we see. And the last but not the least is about what is the price realization which you get? Is that something which is prices are falling or increasing at this point of time? So I think we should, but I just did mention this in my analyst call as well, is the orders which are getting executed today are something which we had taken orders during the time when the prices were high, and when that was coinciding with the metal prices prevailing at that point of time. Now that the metal prices are softening, so naturally the market prices are bound to take a correction going forward. But having said that, so the play between the our process of getting the orders from the right market segments and liking the right mix should probably offset this particular softening which would happen. So having said that, so our main motto or aim has always been having reached the 10% profit corridor, PAT corridor at this point of time. We would like to remain there so that we're credible and able to continue on this journey for some more time.
Right. Talk to us about the order inflows also, because they've been strong at over 3,000 crores. What's leading to this order inflow?
So if you look at our order intake for the last 3 quarters, I think we have been maintaining a momentum of 3,000 crores every quarter. And the first 2 quarters were basically driven by the base orders. The last order was something where we had one-time order from a large order from a railway segment, which actually helped us to go to this. So what we see is that now there is a good mix of large and the base orders coming in. So that's something which we see is a welcome trend. So, and when we look at the opportunities out there in the market, so both from the electrification, motion, as well as the process automation, robotics. We see a good amount of opportunities in the pipeline. The question is the decision has to happen. So, and that's something which we believe that it will happen. So the only point where we could always see is that what could rather delay the decisions, if not avoid the decision, is probably the upcoming elections in the middle part of the next year. So that could be probably something which we need to watch out for. But the basic ingredients on ground, which is about the investment per se, it seems to be on the right direction.
Okay, Sridhar, actually, we'll let you go on that note. Number